All right, good morning, good morning. Today is September 23rd, 2024, and welcome to the live stream. Thank you guys so much for joining. Um, we do have a interesting morning so far today. We took it out previous day high during Sunday's opening, and we instantly took out previous day high. So that's our objective there, taking out previous day high. We did create this hourly SIBI here, or sorry, hourly BISI here with the price move up. So prices should have respected this hourly SIBI to continue higher. However, we closed below it on the hourly time frame, and yeah, we did. We also did create a 4-hour fair value gap here. Disrespected the 4 hours fair value gap, closed below it, and now it's just what would we do from here? But yeah, it looks like we are probably in some sort of consolidation right now. But yeah, usually I would wait the first 30 minutes of the morning either way to see how we close on the 4-hour and the 8-hour time frame. Depending on how we close there would tell me the morning objective at least. And yeah, one price level I would suggest you guys have is Friday's September 13th high of day. So that is actually previous week's high. And depending on what we do here, will we get a immediate weekly rebalance on NQ, or will we create a weekly fair value gap? So that high, September 13th high, could end up being the low end of a weekly BISI. But yeah, that's just what I have in mind as of right now. Yeah. Interesting morning so far. I mean, we still have London lows intact, so that's something I do want to work out. So London lows. London low. And then we have Asia's highs. Asia highs. two session liquidities that we've yet to take out. Oh yeah, we've yet to take out London highs as well actually. So that could be another session liquidity. So that is the New York AM session. Opening bell there. We had a gap up today. So depending on will we actually close the gap, or will we use it as a support level here? But notice how we are kind of like accumulating at the weekly open here. In power of three, in terms of power of three, you always want to be a buyer below the open, and you want to be a seller above the open. So if we anticipate for this next weekly candle to be a open low high close candle, then you want to be buying at the manipulation, and then riding the wave into the expansion of the candle, of the weekly range at least. But yeah, I just wanted to note that out too, that we are trading fairly near the weekly open. That's just something that I noticed. Here's the SMT here. SMT to C chart. Maybe you guys can give me 1 second. So yeah, like I said before, I don't trade that very first 30 minutes of the morning open. I kind of let that opening range kind of create itself and see. I really just want to see how we close here on the 4-hour candle in the 8-hour candle, because that will tell me if we will continue lower or not. Oh yeah, let's just stay on the 50-minute time frame here. Yeah, and a heads up as well, if you guys haven't switched over to this December contract, I would suggest you guys do that. Last week was rollover week, so just something that you should keep in mind. Okay, while we wait for the first 30 minutes, I'm going to get into 2 chess games and then do my pros and cons, improvements, and an example of an A plus setup. Thank you guys. Bum, bum. He doesn't want to let me progress. I go here, he takes, I take here. I gotta score this square. Castles. So I go here, he takes, I take. Turning that. Actually, let's not do that. I probably kept on castle here. His horse doesn't have any squares to go to be honest. Once I get this pawn up here, I'll be pretty strong. I believe this is the move. Okay, I guess that's a move as well. takes. Let's reroute this this knight here, huh? Shall we? Let's get this knight here. This bishop's doing no work. Kind of like that. How that bishop's not doing nothing. I just scooch this back. Or I just take here. Take here. He takes. Queens open. So now if he moves his queen, I take his knight. Let's say he goes here. Then I go here. Precisely. Precisely. Rooks. Pawn. He can probably go here. Then I go here. Oh no, he go there. Ooh. That is a trade time. Alright, let's do one more. White again. This is like the same opening from last game, to be honest. Kind of do want to prevent this knight from going to either of those spots there, actually. Let's play a little bit different line here. Here. This castle first, kick out this rook, and then here. Okay, build this. Surrender. There, let's see. Okay, I'm pretty sure it's I'm still winning here. He still can't do anything. Nice. I go here, he takes, I take. My pawn structure will be a little bit kind of. Oh, what? Word. Okay. I just attacked that. Wow, okay. I'm completely chilling now. I go here. Attacking. Oh, okay, let's get that. He didn't really necessarily have to do that. Here. I go here. I go here. Oh no. I don't think he's doing anything with that move, actually. We had news just now, so we had red floater new dropped at 9:45. Okay. Yeah, I actually gotta lock in here because I'm running low on time. It's a fork. Yeah, queen. Let's say unless he wants to trade off his queen, then I'm chilling. But I don't think he would want to do that. He's losing in material. Yeah. Even. Did I lose the tempo trying to? Oh, whatever. I think I lost the tempo. Castling there, but. All right, so let's take a look at one last time. Take a look at the charts. Not really, and it's just nothing really interesting that I'm seeing here from prices, to be honest. Okay, so some of the pros and cons from previous weeks. So during the September 18, 2024 trade here, I was able to incorporate time frame alignment, breakaway gap theory, and I was able to enter off of a 5-minute fair value gap, treating the 3-minute, I'm sorry, I was able to enter on a 3-minute fair value gap, and I was treating a 5-minute fair value gap as a breakaway gap. So let's go back to that trade and talk you guys through here. So it was on this trade actually. So based on the 15-minute, the 30-minute, the hourly closure, we have had a bullish candle closure here, and notice how we have displacement candles here on the 15-minute time frame. So we have displacement here, we have fair value gaps here, right? So I'm anticipating for prices to take out this 15-minute candle's high with a very nice 15-minute candle. So now I want to go onto the lower time frames to find some sort of entry pattern. Well, there was a 3-minute fair value gap on the lower time frames that could be treated as a gap that gets traded back into. There was a 5-minute fair value gap. However, the way the third candle's closed on the 5-minute fair value gap creation, it suggested the idea that we probably are going to treat that 5-minute fair value gap as a breakaway gap. So I went into this trade thinking, okay, I'm gonna have my stop loss at the 5-minute fair value gaps high, because we shouldn't trade back up into it. And I'm targeting the 15-minute, the 30-minute, hourly high. Like I said, those time frames are suggesting higher prices, and there's time frame alignment. So once we trade back inside the 3-minute fair value gap, I take my entry, and notice how on these comments here on the side, I close my trade here after 15 minutes, because take a look at how we close here on this 15-minute candle. That 15-minute candle is suggesting that we could probably trade back into the newly created 15-minute fair value gap. So as time went by, we created a 15-minute fair value gap, and that 15-minute fair value gap could be retraced back into, because the third candle didn't close above the second candle's high. So I took my closed my trade, and then I was able to mitigate risk, and yeah, so like I said, that pro is time frame alignment, applying breakaway gap theory, and using time as a kind of like a stop loss order, where if we don't do a certain thing in this certain amount of time, then I'm going to close the trade, and that's simply what I did there. And another pro is being patient. Majority of last week was just basically me watching price action on the sidelines. I wasn't really in a lot of these setups. I mean, I didn't see a setup, so I didn't take it. One thing that I learned from watching this dude on YouTube, Justin Ireland, is you gotta let the trade come to you. You can't force anything onto the markets, because whenever you kind of force an idea, it's almost you're in a state of delusion where you're forcing something onto the markets when it actually isn't there. And yeah, those are the pros. Some of the cons are I overlooked the fact that we didn't close above the previous 30-minute and 1 hour candles high. So this goes back to breakaway gap theory, September 16th here. So this is what I was talking about, September 16th trade. So notice how this hourly candle here, how this hourly candle's closure wasn't above this hourly candle's the previous hourly candle's high. So whenever we create this, you know, hourly fair value gap, the way we closed here suggests is that we could trade back into it. And yeah, even on this 30-minute too, this 30-minute candle, notice how we didn't close above this 30-minute candle's high. If we are bullish, we should have closed above that 30-minute candle's high, because then that means we can treat this as a breakaway gap to where we shouldn't trade back into it. And yeah, so that's just one of the pros is, or I guess one of the cons is that I overlooked the fact that we didn't close above the previous 30-minute and the previous hourly candle's high. And another con is I can't formulate a 15-minute or 30-minute power of 3 based on a reaction or quote-unquote reaction to a daily fair value gap. A daily fair value gap should cause 15-minute displacement. It shouldn't cause just a bullish candle closure. If we can get displacement away from a daily fair value gap, then that tells me, okay, we have a reaction to the daily fair value gap right now. And yeah, daily 15, those time frames don't correlate. You can go from like daily to 4-hour structure, but you can't go from daily to 15-minute structure. That there's no, the range there is kind of too far, if that's the correct word. But yeah, some of the improvements here next week I could improve on, being more selective, or being selective with the trades I take. Questions I should be able to answer are like, why do we create this 15-minute power of 3? Is there a time frame alignment between multiple time frames? And can I apply breakaway gap theory to this trade? Second improvement here is whenever, like I said, whenever we are trading inside a higher time frame PD rate, like the daily or 4-hour, wait for displacement candles. Like I said, you don't want to simply base it off of a 15-minute bullish closure, bearish closure, depending on if it's a SIBI or BISI. No displacement, no trade. No fair value gap, no trade. So if there's no fair value gaps that gets created whenever we do come into the daily fair value gap, then that means there's no displacement. There's no willingness to trade higher or lower. Pay attention to the entry fair value gap. Treating the entry fair value gap, sometimes the entry fair value gap should be treated as a breakaway gap. Sometimes it shouldn't. Pay attention to how the entry fair value gap is created. And if the trade model doesn't prevent itself, even though you know you have a draw on liquidity, if there's no entry pattern, then you don't force the trade. Yeah, bye, man. If there's no entry pattern, then you can't force anything onto the markets. Like I said, even though the objective is clear. So I do want to go over one A+ setup here with you guys, just so it can help me kind of get a refresher of what an A+ setup looks like, and it's also a kind of like a reminder that, hey, these setups occur day in and day out, weekly and monthly. Just you have to be patient and allow the markets to come to you. So first A+ setup, or I guess A+ setup here is, consider this one. So prices had a reaction to the weekly inversion fair value gap. We displaced lower on the 4-hour time frame, and we created a daily fair value gap. We trade up into that daily fair value gap, and notice how we are starting to get some sort of reaction on the 4-hour. On the 15-minute time frame, like I said, whenever we trade up into a daily fair value gap, we should get displacement on the lower time frames. And here you can see that we started to, price lower after trading into that daily fair value gap. And notice how we also traded into the equilibrium of the price range from this swing high to this swing low. So, like I said, we had those displacement candles. So now I'm just waiting for an entry order. Excuse me. So we created this 15-minute fair value gap here, and prices created a bearish 30-minute candle closure. So this 30-minute candle, we can anticipate for prices to take out that 30-minute candle's low. And so whenever prices trades back into this 15-minute fair value gap, we have had a bearish reaction to it. So on the lower time frames here, on this 3-minute fair value gap, this 3-minute fair value gap suggests the idea that we could end up taking out the 30-minute low and that 15-minute low. And whenever prices trades back into the 3-minute fair value gap, we take out the 15-minute low and then the 30-minute low. And keep in mind that this is in confluence with the higher time frame. We are trading inside a daily fair value gap, so we're expecting some sort of an expansion. We couldn't get the manipulation leg, but we can trade the expansion leg, and which is what we did here. So this is an expansion trade, A plus setup. So ask yourself, why did we create this 15-minute power of 3? We created this 15-minute candle, this bearish candle, because we came into a bearish 15-minute fair value gap. Is there time frame alignment? Yes, there is. The 15-minute is bearish when the 30-minute is also suggesting bearish price action. And yeah, so like I said, if you're able to answer those questions, then that setup becomes a higher probability. And going back to the actual charts here, based on this 4-hour candle closure here, in about 3 seconds, I can't really choose a side here, to be honest. 1 hour doesn't really look that bearish or bullish. Same thing with the 4-hour. What does the 8-hour candle look like? Yeah, I don't know. I would wait until there's a clear setup. If we can get some sort of setup where we react to a 15-minute fair value gap, or we can get some sort of time frame alignment model where we can get a 15, 30-minute and hourly time frame. But as of right now, I could care less where prices wants to go. Take out 4-hour high or 4-hour low. It doesn't really concern me, but yeah, setups here are they're not the cleanest of setups. And while we wait for another 15-minute candle creation, I'm gonna go into another chess match, and if there's no setups, I'm just gonna turn off the stream. Wow, we're gonna play the same line as I'm gonna develop this. I go here, he takes. I think I'm losing this here, so I go here, he takes, I take. Yeah, I was anticipating that, to be honest. Hmm. Free up this square here. Oh my gosh, no way. Oh wait. I guess I could do that too, but now I'm hanging up. He's gonna take here. Ooh. I gotta get these squares onto I gotta get my pieces onto a darker square. Yo? Okay. I'm actually eating every single piece of this right now. I go here, he takes. Okay, wait, actually. No way. So it's gonna be a classic. Okay. I just gotta make sure my pieces are in the right squares here. Oh my gosh, I'm actually running so long time. Ah, I ran out of time. Dang it. I mean, I had up 3 pawns here. Pretty sure I would have won that if I just had a little bit more time, but extremely slow. I played extremely slow. Alright, I'll be right back. I'm gonna go get some food and yeah. What an interesting morning. Let's see what SMC is. Yeah, I don't know. I don't know who's making. I don't know if there's anybody that can actually profitably trade this conditions right now. Like, this isn't something that you would want to be trading in. Oh gosh. That spaghetti is spicy. It's actually so spicy. Jeez. Let's mark out what the 10 o'clock opening price is here. Ooh. What is this price action, bro? What? That's not pretty at all. Ooh. Ooh. Something about this just doesn't give off high probability at all. I don't know. Whew. Let's take a look at what happened during June, mid-June. So I do want to go over some trades in June. Perfect. Wait, is this 2024. Okay. June 12th, 2024. Wednesday. This is CPI / FOMC. So we priced higher during the release of CPI, and I was not given an entry to move higher. So I waited until the afternoon session, and we had FOMC. So after we created a 4-hour FEG here, we retraced back into it during the 2 o'clock open. So that manipulation leg at 2 o'clock is always going to occur with with FOMC. The trade here I took is based off of this hourly candle. Okay, so we actually completed this 15-minute objective here already. Take it out, retrace back inside a 5-minute fair value gap. I don't think I would have taken this again. Just with the new rule sets that I have for myself, I wouldn't take this. Thursday trade. During the lunch session, prices trades retraces back into the 1 hour / 4 hour fair value gap. We had a bullish closure on the hourly time frame. Okay. Pay attention to how this 4 hour candle closed on this. Okay, so this is an ES trade. So the trade I base my model based off of is, I believe it's this this 15-minute candle right here. We traded back inside the 15-minute fair value gap. We created a 15-minute swing high. Oh, sorry, it was this one actually. What high is this relative? What is this high? It was actually, it should have been off of this. Okay, so yeah, it would have been off of this 15-minute candle, because we traded into a 15-minute fair value gap here. And then we had a bullish 15-minute closure. So after we had that bullish 15-minute closure, I enter at the 5-minute fair value gap, and I target that 15-minute high / 4 hour high. So that would have made sense for an entry there. 6:14 Friday lunch session. During the pre-market, prices dipped into a daily fair value gap. However, NDQ did not trade back into its daily fair value gap, but ES did. So there was SMT coming into the 9:30. I wanted to see how prices would react at the 1 hour SIBI. We did not respect it. We closed above the hourly SIBI. So we disrespected a hourly SIBI here, and we had SMTs at the lows. And this is Friday, so we already completed this objective here, the retracement back inside. Okay. So I guess this trade is based off of how we disrespected this hourly SIBI. New York AM session highs, okay. Notice how we are continuing to respect this 15-minute fair value gap. Okay, that's good. Breakaway gap theory. Respectable. Okay, I wouldn't have taken anything here because, what is this? I don't think I would have taken anything here on that Friday. And this one's 6/18. Okay, so coming into today, I was anticipating for prices to be choppy. I waited until we opened up at 10 and started looking for any trades. Notice the 30-minute candle I based my trade off of. I based my trade off of that 30-minute candle is power of 3 within that 30-minute. Okay, so we've created a bearish 15 or 30-minute candle after coming into a 30-minute fair value gap, 30-minute fair value gap. Same thing with this 15-minute too. This 15-minute suggested lower prices, and it's in alignment with the 4-hour and 30-minute. Lower time frames, we had this 5-minute fair value gap. This 5-minute fair value gap suggested that we could continue lower. I enter off of the 5-minute fair value gap that overlapped with the new day opening gap, and I'm targeting that 15-minute low slash 30-minute low slash 4-hour low. And yeah, I mean, this is a pretty solid trade. The entry fair value gap should be traded back into, or could be traded back into. It's not a breakaway gap. Time frame alignment between the 30-minute, 15-minute, and 4-hour time frame. Solid. And that trade was actually on a Tuesday. So Thursday, coming into the morning, I was favoring sell side delivery. We just placed lower, closing below a 4-hour busy. $15-minute here isn't conflict. Okay. This is a solid trade, to be honest. I mean, this fair value gap could be traded back into. However, 30-minute, 15-minute here, we close below this. Okay, yeah, that makes sense. So this trade, this fair value gap should be traded back into. However, okay, Friday, 15-minute power of 3. Disrespected that. Okay, Friday 11 session. So shouldn't this be Thursday actually? Oh yeah, it is Thursday. Trade back into that 4-hour fair value gap. Had a notice how this 4-hour candle closure. That is a 1-hour candle closure. 1-hour candle closure after retracing back into a 1-hour 4-hour fair value gap. We had the 15-minute overlapping with the 15-minute and hourly, and 30-minute are suggesting lower prices. Open up at 3, trade back into that 30-minute fair value gap, take out that 15-minute low, and then we just started to expand lower. Pretty solid. So that actually wraps it up for mid-June trades too. placement on the lower time frames. Interesting, interesting. We took out London highs. Asia on ES we already took it out. Asia's highs.